Hello, everyone, and a very warm welcome. I am Mridul Kingo, and I'll be your host for today's session on Gift City, India's first international financial service center. If you're here today, you would have probably asked yourself, what exactly is Gift City? You might have noticed that there's a lot of buzz around this emerging financial hub with investors, fund managers, and fintech leaders all increasingly turning their attention towards it. But what's driving this growing interest? What's behind all of this hype? It's impressive to see just how rapidly Gift City is picking up, with a total of 766 entities now operating from Gift City, and many are actively exploring opportunities here. The momentum is undeniable. Let me share some compelling numbers to put things into perspective. Did you know 198 venture capital fund schemes have already been launched at Gift City? 14 global fund schemes have already been redomiciled to India. On the fintech side, there are 12 fintech entities that have been authorized. 44 entities are active in the innovation and regulatory sandboxes. Two accelerators have been authorized to support fintech innovation as well. And today, nearly 2,600 investors from over 50 plus countries are actively participating at the GIFT IFSC. Clearly, something significant is drawing global investors, fund managers, and fintech innovators to Gift City. But what exactly it is? Whether you're planning your next fund, advising global clients, or exploring India as your strategic base, that's precisely what we are going to uncover today. Joining me today are two of my colleagues and gift setup experts from Treelife. Priya, our associate partner who heads Treelife's financial advisory practice, specializing in investment structuring, cross-border transactions, tax and regulatory advisory, and also leads on AIF setups and advisory and setup services for GIFT IFSC. Dhairya, our senior associate in the financial advisory team, he brings deep expertise in the direct tax and regulatory services, particularly within the GIFT IFSC framework. Throughout the session, please free to share your questions in the chat box, and we'll ensure that they are being addressed during our dedicated question and answer segment. Without further ado, let's dive right in and uncover the exciting opportunities awaiting to you in the Gift City.
Thanks, Mridul. I think that welcome everybody. Thank you for taking the time out and joining us today as we help you uncover and kind of understand what is Gift City, what are the benefits, who is allowed, how to set up. So basically what we're trying to cover is the how, what, why, and basically the other finer aspects that you guys need to know if you want to evaluate Gift City as an option or a jurisdiction for yourself or any other ecosystem in which you operate in, right? So quickly diving in before we get into the presentation, quickly taking you through the agenda of what we are trying to cover here. We'll first understand a little bit about what is GIFT IFSC. Then we'll dive a little bit deeper into what an IFSC is, right? We'll discuss why it's required for any country. Then we'll get into the benefits of setting up. We'll also look at the tax incentives, which are very, very popular. And then take an overview of the permissible sectors and also get into some business developments that are currently happening in GIFT IFSC. And we'll also quickly take you all through the process of setting up a unit in GIFT IFSC, and then we'll leave the floor open for question answers. We'll try and cover as many as we can in the time limit that we have. Right now, quickly getting in. Right now, what exactly is Gift City? Right now, everybody has heard Gift City over the span of the last 5 to 10 years. It's been spoken about. The Vibrant Gujarat was a big hit last year, which garnered a lot of footfall and also a lot of eyeballs across the world about what is Gift City, what is Vibrant Gujarat, why was it held in Gift City, stuff like that. Right now, everybody has heard about it, has read it somewhere, but we'll help you uncover today about what exactly it is, right? And what exactly which businesses are allowed to kind of operate in Gift City and how they'll be able to do that. Right now, quickly a top angle view is that Gift City is located in the state of Gujarat in India. It is located between Gandhinagar and Ahmedabad in the state of Gujarat. The Gift City is an acronym for Gujarat International Finance Tec-City, and as the name suggests, it is focused on finance and technology as its main industries that it permits people to operate in within the land parcel, right? Currently, it is a development of around 886 acres of land. There is a proposal to expand it further to 3,300 acres, but that's still in the talks, right? Now, Gift City is like a small city which has further been split into three zones. There is a DTA, which is your domestic tariff area. There is an SEZ, and there is an IFSC. Right now, your DTA is kind of like within the contours of Gift City, but it does not enjoy the regulatory and tax benefits of an SEZ, which has been given specifically to the SEZ and the IFSC. But DTA is kind of like an enabling area for the entire Gift City to prosper, and also enables the IFSC part of the Gift City to kind of prosper and move ahead, right? Provides a great ecosystem. Right now, coming to the location, it is very strategically located. It is only around 20 to 25 minutes from Ahmedabad International Airport, and the metro has also come up very recently, and it has great connectivity within the state of Gujarat, right? The infrastructure is state of the art, and it also ranks 57th on the Global Financial Centers Index, right? We'll get into that in the next slide, but just something that is interesting to note, right? And as the name suggests, it is a global IT and finance hub. So the focus remains on financial services and information technology related to the financial services sector. Right, it does have a lot of development. There are 3 buildings and many more already coming up in Gift City. There are a lot of plug and play offices which are coming up. So the infrastructure is something which is constantly being worked on, and we are seeing like tremendous growth on that front, right? There is also it is India's first and only international financial services sector, right? Now, having said that, I think quickly let's spend 2 minutes to understand what exactly is an international financial services center, right? So just as a country, right, to enable financial globalization, right, and to also enable financial transactions with the country and other non-resident countries, what happens is that an IFSC kind of acts as a catalyst for that, right? Now, an IFSC, it contributes tremendously in the volume of international financial transactions, right? So it enables residents of one country to transact with global clients, and it also, on the other hand, attracts non-residents of that country to kind of come in and transact with that country's entities, right? So this financial globalization is something which is kind of enabled in an international financial services center, right? To take a quick example, everybody must have heard of SEZs, right? So SEZs are kind of like a special economic zone wherein if you set up your factory or industry, then what happens is that you are given certain tax and regulatory benefits, right? And kind of that SEZ kind of lifts up that entire area, because people are incentivized to set up their factories and industries in that area, right? Now, an IFSC is exactly similar to that, but it caters to financial services client, the ecosystem, right? So basically, your banks, your insurance companies, asset managers, portfolio managers, fintechs, all of these people are the ones who are incentivized to come and set up shop in an IFSC, which kind of then eventually builds to the ecosystem of the entire state as a whole, right? To take some examples, if you were to look at some global IFSCs, I think Dubai International Financial Center, DIFC, is pretty popular. Ireland also has an IFSC, which is in Dublin, which is pretty popular. Singapore, London, all of these are also IFSCs, right? Now in India, Gift City is the first and only IFSC as of late. Now, two interesting things to note here, right? The income tax law and the FEMA law, right, which kind of governs your exchange control regulations, right? Both these laws have accorded a special status to anybody who sets up an entity in Gift IFSC, right? Now, the Indian income tax law says that if anybody sets up a shop in Gift IFSC, then they are deemed to be a resident in India. Okay. While on the other hand, if the FEMA laws, which is your exchange control laws, say that if you have set up shop in Gift IFSC, you are considered as a non-resident, right? Now, what happens is that from an exchange control perspective, being classified as a non-resident is a great advantage, because any movement of funds from Gift IFSC with any other country or any other jurisdiction will not have to follow any exchange control rules and regulations which are currently in place in India, right? So that gives a great leeway of free flow of foreign exchange from Gift City to other jurisdictions, right? On the other hand, granting a residential tax resident status from an income tax perspective, that is also a great advantage, because there is no reliance on any DTAAs or any other cross-country tax regulations, right, for determining the taxation of entities which are set up in Gift IFSC. We'll discuss this in a little bit more detail when we come to the tax benefits, but this is an interesting point to note. Right now, one more thing is that the Gift IFSC in India, if you were to set up an entity in the financial services segment, then it is very likely that you would be regulated by like either a SEBI or an RBI or a PFRDA or an IRDAI, right? Depending on what sector you're doing. Versus if you were to set up in IFSC, then what IFSC has done is that all these four regulators, which is your SEBI, RBI, PFRDA, and IRDAI, they have kind of accorded their powers to a special regulator, which is called as IFSCA, which is your International Financial Services Centers Authority, right? So anybody who sets up a unit in the IFSCA in India needs to be regulated only by the single regulator, right? So a unified regulator has been set up specially for this Gift IFSC, right? So this is also a great benefit and does not require you to deal with multiple regulators. Now coming to key benefits, right? So this is just like a snapshot of the benefits, but I think quickly, as we discussed, right, residential status is what we discussed. To quickly recap is that from a tax perspective, from an Indian income tax perspective, anybody who sets up shop in Gift IFSC is deemed to be a resident, versus from an exchange control perspective, you are deemed to be a non-resident. Following from that same point is that dealings in foreign currency, right? So anybody who sets up shop in Gift IFSC can freely deal in foreign currency. They don't need to deal in the Indian rupee. I think 11 or more currencies are accepted in Gift IFSC, which obviously includes your USD, Singapore dollars, and the like. The third is that it has a very light touch regulatory regime, right? And there are also some great tax benefits which have been put out for people who set up entities in Gift IFSC. Also, here one important point to note, as we discussed, is that there is a unified regulator, right? So there is ease in doing business from that perspective. The fourth is that there you can, given the proximity to India and the ease of doing business with global customers, your customer horizon is kind of expanded substantially when you set up an entity in GIFT IFSC, because it allows you to deal with a whole host of a whole new market altogether, and there is a lot of ease in doing business in that. Ease in setup, right? So recently, a few months ago, a SWIT system has been put in place, which is your single window clearance, which means that earlier, to give some perspective, is that earlier, when you wanted to set up an entity in IFSC, we had to make applications to a couple of regulators, which is your SEZ and your IFSCA. But now with the SWIT portal coming in, it's a single level application that needs to be made, and it has significantly reduced the time of getting approvals. Now coming to tax incentives, right? I think the most popular one is the tax holiday for 10 years. So just to put it into perspective, is that anybody who is earning business income in GIFT IFSC from their business, they are given a tax holiday for 10 consecutive years out of 15 years. So they can choose a consecutive period of 10 years out of the first 15 years wherein they can choose to claim this tax holiday. The second is that there's a lower rate of MAT and EMT of 9%, which has been given. This in comparison to an 18% MAT AMT rate if you were to set up in mainland India. The third is there's no customs duty on any goods, services procured from Indian waters. The fourth is dividends. So any dividends which are distributed by an IFSC unit to non-resident shareholders are subject to a flat rate of 10%, right? So there's no need to go into a DTAA and kind of see their eligibility and take a lower rate there. This has been given in the income tax law itself, right? Now again, GST, because it is treated as an Indian unit, there is no GST on services which are rendered by anybody in IFSC to any international entities, because that will be considered as export. Also, there is no STT, CTT, and even stamp duty on any transactions which are conducted on the IFSC stock exchange. And another one is there's no capital gains tax on any trading that happens on the IFSC exchange, right? While the volume is comparatively lower, we are seeing a lot more traction here, where they will talk about it. But given that Indian startups are also now allowed to list on IFSC exchanges, we are seeing significant traction there, where this tax benefit will lead to substantial tax saving for investors. So these were the tax incentives. Quickly moving on, this is just a broad overview of permissible sectors. So as I mentioned before, IFSC kind of caters only to finance and IT. So anybody in this ecosystem is kind of permitted to set up. Quickly looking at it, you will see banking, capital markets, fund management, fintechs, global centers, aircraft leasing, ship leasing. These are the kind of people who are allowed to set up shop in GIFT City. You will see also ancillary services. Now, ancillary services is consultants, trustees, accountants, all of these people, right, who are required for this ecosystem to operate. They all are also permitted to set up shop in GIFT City. You will see universities. So the thought is that they want to create a great talent pool also to kind of enable these BFSI ecosystem participants. So that's why they are also allowing universities to come and set up, which will offer courses to kind of enable a great talent pool for this ecosystem. Quickly looking at numbers. These are some numbers I think you can see on the screen, but you'll see a stark growth in the number of entities, right? As Mridul mentioned, there are around 760 entities already operating out of Gift IFSC, and multiple are in pipeline who have applied and are in the process of setting up. If you see the banking transactions, there are $120 billion of banking transactions have happened in this 2024. Number of schemes launched is also 198, which means that 198 funds have been set up in Gift IFSC, along with 130 FMEs. Basically means the managers who have set up in Gift IFSC. See, the exchange turnovers are also significantly high, and which kind of demonstrates how this sector is really growing and really picking up, right? With 28 banks and 2 stock exchanges, I think this is really picking up. Sectors like ship leasing, fintech, aircraft are also some in which we are seeing a lot more traction in the past couple of months. Moving on, I'll hand it over to Dhairya, who will give you like a brief overview on each sector. So I think that will just help you understand better.
Yes, thanks, Priya. As Priya mentioned and gave an overview on the tax and regulatory regime at IFSCA, now we will delve into the various permissible activities at IFSCA one by one. So the first one is the fund management regime here at IFSC. In the fund management regime here at IFSC, there is a concept of a fund manager entity which is registered with the IFSCA for undertaking the business of fund management. Unlike SEBI, wherein the EIF or the fund obtains registration from SEBI, here it is the fund manager entity which obtains registration with the IFSCA for launching various schemes and funds. Broadly, there are 3 categories of FME. First being authorized FME, the second one being non-retail category, and the third being retail. Under the authorized FME category, one is allowed to launch venture capital scheme, including angel funds and family investment funds. While under the non-retail category, primarily there are CAT 1, 2, 3 AIFs which are launched under this category, and under the retail scheme, there is mutual fund schemes launched by the retail FMEs. As Priya mentioned in the business development side, the fund management activity has really picked up over a time here at Gift IFSC with close to 200 funds already being launched here at IFSC. Currently, what we see majorly here is more of them are feeder master structure, wherein the feeder funds here and the other one being a Cat 3 AIF for inbound investments as well as outbound investments. Particularly for inbound investments, the Cat 3 AIFs are increasingly explored, having a non-resident investors in 4D. Apart from it, there is also a 100% FPI relaxation for investments to Gift IFSC into India. All this combined together makes Gift IFSC a very lucrative space for fund management regime. In addition to it, there are also tax neutral provisions for relocation of a foreign fund to Gift IFSC, which also enables shifting or relocating the Mauritius or a Singapore-based fund which is managed earlier from India to relocate to IFSC, which also avoids the exposure of PE poem which used to be there earlier. In addition to this, IFSC has also eased out various provisions under the FME regulations by introducing the Fund Management Entity 2025 regulations, wherein it has significantly reduced the corpus requirement as well for the CAT 1, 2, 3 schemes or the venture capital schemes from USD 5 million to USD 3 million. It has also come up with a provision allowing 100% participation by the FME in the scheme to be launched by FME, provided the UBOs are NR and only the fund invests only 1/3 of its overall corpus in a single group. So all these changes brought together makes IFSC a very lucrative fund management regime here. In addition to this, very recently the Budget 2025 at the enactment stage also brought up an amendment in relation to carrying out fund management activities from here under a safe harbor regime, wherein the fund managers can sit here and manage global funds without that leading to creation of a PE poem in India. So this all combined together makes GIFT IFSC a very lucrative jurisdiction for fund management activities. So this was a broad about the fund management related activities. Now going on to the another more burgeoning regime here is fintech related activity. So fintech as a concept is a very uh, largely pushed for sector by IFSCA, and it divides the fintech activity into two parts broadly. One being fintech, the other being techfin. The fintech under the fintech category, any entity which is desirous of uh, developing software solutions or products or applications related to financial services can obtain registration under fintech framework. While any entity which aids and assists the entities operating in financial service space or processes registration under TechFin. To give you a real life context, in fintech, the example can be considered of a Paytm or a Zerodha. Versus in TechFin, we can consider an example of Wipro or Infosys, which support various FS clients like Goldman Sachs, JP Morgan, etc., by providing technological solutions to such clients. Under the IFSCA fintech regime, a facility is also available by the name Sandbox Facility, wherein the entities can test check their product and applications through live facility, which is offered by IFSCA under the Sandbox regime, which is also kind of a very interesting thing here. Apart from this, considering the evolving digital payment space, digital payment sector, IFSC has also come up with payment service regulation, wherein there are four main categories of services intended to be allowed from IFSCA, that being e-money account issuance services, cross-border payment services, merchant acquisition services, escrow services. All these combined together, the a PSP player at Gift IFSC can provide these services digitally, facilitating the onboarding of a global NRI client seamlessly, reducing lead times and providing significant opportunities for the global NRI community to tap into Gift IFSC products seamlessly, and vice versa for the Indian diaspora to remit funds under the LRS route through these PSP solutions. So this was all about fintech very broadly. Now we move on to the capital market intermediaries. In capital market intermediaries, the concept here is broadly to facilitate the financial products and services sector in IFSC, and these regulations cover various players such as broker dealers, clearing members, depository participants, investment bankers, investment advisors, custodians, credit rating agencies, debenture trustees, etc. And with India INX and NSE IFSC already operational here, and the kind of traction in the trading volumes already increasing month on month, the broker dealers and the investor participants can explore the global access program of India INX for investing in global investment products, which are facilitated through India INX portal by onboarding on India INX either as a broker dealer for proprietary trading, or on own account by an individual under an LRS route, or also by an NRI directly on that said platform. Apart from this, the foreign-based brokers are also allowed to do a trading on the IFSC stock exchanges without separately obtaining a stockbroker registration with any of the stock exchanges, or without setting up a separate entity here under the category of remote trading participant, whereby a foreign-based stockbroker, which is duly regulated by the host jurisdiction, is allowed to normal formality for qualified participant and trade on the IFSC stock exchanges. This brings a lot more trading activity to IFSC stock exchanges, promoting IFSC ecosystem as a whole and the IFSC listed products as well. So this overall brings us to the next category of the permissible sector, which is a finance company. As the name speaks, finance company is similar to an NBFC in India, wherein the functions intended to be permitted under finance company regulations are a lending, borrowing, or an investment activity. The regulations broadly divide the type of permissible activity into two parts, one being core activity and the other being non-core. Under the core activity, lending, borrowing, investment, everything is covered. While under the non-core, the support activities or the other emerging activities such as ship leasing, aircraft leasing, merchant banker services, etc. are covered. So all these services combined can be provided by obtaining finance company registration either for core activities or non-core or a combination of both. Depending on the activity which you are providing, a core or a non-core, a net worth requirement for you is decided. For a core activity, the net worth requirement is USD 3 million, while for a non-core activity, the net worth requirement is only USD 0.2 million. Apart from this, for an finance company providing core activity has to also comply with certain prudential regulatory norms such as liquidity ratio, capital ratio, etc. And any finance company also has to comply with the guidelines on corporate governance by framing an appropriate policy on same. This was broadly about the finance company regulations, and finance company regulations also permitted setting up a regional or a global treasury center, for which IFSC has already came up with a separate framework in 2021, which now they have amended and brought in a new framework, amended framework in April 2025 very recently, wherein they have enabled all such group financing activities such as intra-group lending, intra-group borrowing, investment on behalf of group entities, etc. In addition to all that permissible activities, they have now permitted two more interesting activities, one of them being acting as a holding company and the other being provision of support services on behalf of group entities in relation to booking of insurance policies or pension related commitments of the other group of entities. All these services can be provided by a treasury center here at Gift City to all the group entities in any of the freely convertible specified foreign currency here at Gift IFSC, making it much more easier for the treasury center to navigate through the currency related risk. And also they can also undertake a relevant hedge or a derivative trading. This combined together makes this concept very lucrative for the treasury centers exploring a setup here. Apart from this, the net worth requirement for a treasury center is also very less, that is USD 0.2 million only. However, they have to comply with a substance requirement of employing bare minimum 5 persons here at GIFT IFSC. In addition to this, there are also certain additional tax arbitrages available for the intra-group financing through global regional treasury center or a finance company wherein they are doing a inbound ECB funding, meaning thereby where a gift IFSC based company or a bank lends to an Indian company, the Indian company paying interest on such a loan to the IFSC based entity is not required to deduct any TDS on it under section 194A, considering that there are specific exemption available to the Indian company from deducting TDS, provided the IFSC company is claiming tax holiday under Section 80LA. While in turn, the IFSC company pays interest to non-resident from IFSC, that is also in turn exempt for the non-resident, making it a tax arbitrage situation in case of a gross up withholding arrangements here for Indian ECB borrowings. So this is kind of a very game changer tax advantage available for the India-based entities borrowing ECB through IFSC-based banking or finance companies. This would significantly reduce the grossing up tax costs for the borrowers in India. Now, moving on to the another sector, that is ancillary services sector. As the name itself suggests, this is kind of a sector which permits or aids the overall IFSC ecosystem by providing support services in the form of a compliance service, legal service, audit, asset management support service, trusteeship, etc. So here the entity can be set up in this ancillary service framework for providing any of the aforementioned services to the clients based out of IFSC or to the clients based out of global jurisdiction, provided they are engaged in financial services, or to Indian clients who are intending to set up their presence in IFSC. Earlier, the services pertaining to accounting, auditing, bookkeeping, and taxation were also covered under this framework. But it restricted, the service provider was restricted to cater such bookkeeping, accounting, taxation services only to IFSC based clients or the global clients who are in financial service place only. Now, this considering this lacuna or the uh, global opportunities which are available for a bookkeeping or an accounting services which can be provided from GIFT IFSC here. IFSC in June 2024 came up with a bookkeeping, accounting, taxation, financial crime regulations which are discussed after this slide. Yeah. So under this regulations, IFSCA separately came up with a provision to enable provision of the aforesaid four services from IFSC-based entities globally to any client, irrespective of the sector in which they are operating, as against a restriction of serving financial service sector in the ancillary service category. So this kind of opens a plethora box of opportunity for the IFSC-based players to provide bookkeeping, accounting related services to the global clients. And as we all know, India is already a global hub for offshore stroke outsourcing accounting services provision. So this can be a game changer for the overall IFSC ecosystem, coupled with the tax incentives which are available in the form of 10-year tax holiday. However, these regulations also impose certain minimum substance requirement in the form of having a minimum 60 square feet office space per employee, etc. So that needs to be complied with. But overall, these bookkeeping related regulations if are seen to be as a game changer for the outsourcing or the offshore accounting industry, which cater from mainland India currently. Apart from this, we also have two more growing service categories or the permissible sectors here at IFSC, that are aircraft leasing and ship leasing. Under this aircraft leasing and ship leasing, both of them are kind of similar regime here at GIFT IFSC. An entity can provide a financial lease or operating lease services getting out of GIFT IFSC, and either of them can be provided by obtaining a registration as a finance company for providing a non-core or core depending on the type of lease which you are intending to give from here. So and also the IFSC based entities are having a tax holidays on capital gains on from transfer of aircraft or a ship directly, or on transfer of shares of SPV which owns the aircraft or ship, which is also a similar tax incentive or a favorable incentive similar to the global jurisdictions like Ireland, Dubai, or Singapore. So these all regulatory amendments coupled with the light touch regime here at GIFT IFSC is expected to boost overall aircraft and ship leasing segment as a whole. And apart from this, there are already large players who have a presence here like Indigo, Air India. They have already set up an aircraft leasing unit here. And in ship leasing also, there are players like Shipping Corporation of India who have set up their presence here. Apart from provision of leasing services, they are also allowed to cater services such as asset management support services to the vessels or the aircraft which are already registered with the IFSC entity. And in addition to this, any entity desirous of exclusively providing asset management and ship broking services can also avail registration under ancillary service framework for providing that services to IFSC based clients as well as to the foreign clients. So now we move on to the next sector, that is insurance sector. Again, here the insurance sector is also quite booming currently with the relaxations or the tax incentives introduced by Budget 2025, wherein the budget has proposed to amend the withdrawal proceeds on insurance policies issued by IFSC entities. So this is kind of expected to keep up, boost the overall insurance business here at IFSC. As to the eligibility, Indian insurance reinsurer or foreign insurer are eligible to set up an insurance entity here in IFSC for providing health insurance or a term insurance products to all the global NRI clients. Also, there is a category of insurance intermediary wherein one can obtain a registration as insurance intermediary for providing various services such as insurance distributor, composite broker, corporate agent, direct broker, and reinsurance broker. Apart from that, they can also provide insurance claim service, surveyor and loss assessor related service, and the third party administrator services. And we also have a very large insurance players present here already in the form of HDFC, Kotak Life, HSBC Canada, New India Assurance. All these big players are already present here. And with the announcement or the amendment by Budget 2025 for this insurance related uh, stuff, the insurance sector is expected to kick up here at GIFT IFSC overall. Moving on to the next permissible activity, that is the Global In-House Center. As the name itself suggests, the entities desirous of providing back office or the support services to the group entities globally from GIFT IFSC can explore setting up their entity under this framework, wherein they can cater a back office or support services from GIFT IFSC, but the only condition as to the eligibility of registration under this category is that the parent entity or the group should be engaged in a financial service sector in respect of providing a financial product. Then and then this registration is available. However, if the eligible entity should surely explore this registration because this would aid in availing uh, back office support services from India, which they are already doing from mainland India, by ensuring that they also continue enjoying tax holiday here at GIFT IFSC and reducing the overall cost at the group level. So this is kind of a very interesting framework, although not very widely explored currently at GIFT IFSC, but this should be surely looked upon. Apart from this, as Priya mentioned, in with a vision to develop the ecosystem as a whole here at GIFT, the framework also allows the university setup by foreign universities or foreign educational institutions to set up their presence here in the form of a branch or a campus, wherein they can offer courses to the Indian students in the areas of financial management, fintech, science, technology, engineering, or mathematics, etc. So as to upskill the overall talent pool available within the ecosystem and keep on the overall ecosystem thriving and all inclusive. So this was all about universities. Now we move on to our last slide as to the permissible sectors. As banking is also a permissible sector as a requirement everywhere for all the financial services. So this under the banking regime here at IFSC, Indian banks as well as foreign banks duly regulated by their host country regulator are allowed to set up their presence here. Unlike India, here the regulator is only IFSCA and not RBI. And our IBUs, the banking unit set up at GIFT IFSC can provide all such services which are provided by global banks sitting outside of a Dubai or a Singapore. In addition to this, one interesting aspect to note here is that CBDT has already long back relaxed the requirement of having PAN for opening a bank account here at GIFT IFSC for non-residents. With this relaxation, they just need to submit one form wherein they can open a bank account without having a PAN with GIFT IFSC banking unit. This amendment or this uh, relaxation provides a plethora of opportunities to banking units at GIFT IFSC to also explore opening bank accounts for a foreign-based entity such as a US company or a DIFC company or a Singapore company, kind of making the alignment with the vision of providing global services or global banking solutions from GIFT IFSC. So this combined together along with the deposit and related services provided from banks at GIFT IFSC, the banking sector is also thriving really at GIFT IFSC currently. Apart from this, there are certain emerging activities, and the first one being listing on IFSC stock exchanges, as mentioned by Priya, with the central government amending rules pertaining to provisions of direct listing of equity shares of Indian company on at the stock exchanges here at IFSC. The non-resident community can directly tap into the investment opportunities on the IFSC stock exchanges, ensuring no currency related risk since they are eligible or required to invest directly in the foreign currency. Also ensuring no capital gain tax on such transactions is a plus added advantage for the non-resident community. And it is expected that listing on IFSC stock exchanges is expected to pick up in the times to come. Also, apart from this, there is a category of Bullion exchange here at IFSC, wherein there is an exchange by the name IIBX, which facilitates trading or procurement or supply of gold, silver through the Bullion exchange, wherein a qualified jeweler or a qualified supplier can procure or supply gold or silver through the Bullion facilitated framework. And in addition to it, there are also vault managers in GIFT IFSC to facilitate the trade through bullion exchanges or the physical movement of gold and silver here. Apart from this, the IFSC has very recently introduced a framework for registration of international trade financing service platform, wherein any entity desirous of offering factoring related services through a platform can set up an entity here in IFSC and do a setup of a platform for factoring here in IFSC and provide services related to invoice discounting or a supply chain finance or receivable financing from here, ensuring that the Indian exporters get timely factoring services from here without they having to tap to some offshore jurisdiction. While this is very recently introduced regulation, it is expected that this will also provide a lot more working capital flexibility to the Indian exporter community at large. So this was all about the permissible sectors in brief, very brief. I hope the audience got a brief or broad idea as to the permissible activities here at IFSC. Now we will briefly touch upon the process for setting up a unit in GIFT IFSC. So unlike a mainland incorporation process or an India incorporation process, here at GIFT IFSC the process for setup is slightly different. Here generally what the permissible sectors are already given, wherein a entity can the eligible permissible activities within GIFT IFSC framework. And for that, really prefer is having a use case discussion with the regulator here at GIFT IFSC, that is IFSCA, to demonstrate the business use case and explain how it fits within the eligible permissible use case framework. Once that has been discussed and given a soft go ahead, then an entity has to identify a office space here in GIFT IFSC. And as Priya mentioned, there are also a lot of plug and play facilities available here in the form of co-working space, which people generally explore. And once that office space has been identified, the developer here would issue a provisional letter of allotment, basis which an application for incorporation of LLP or private limited, as the case may be, can be filed on the MCA portal. Once the incorporation formalities are done, then the application to the IFSCA and SEZ related registration is done on SWIT portal, wherein SEZ related approval as well as IFSCA approval is given. And once the approvals are received, on then the entity is required to do certain one-time SEZ compliances in the form of BLUT, LOA acceptance, etc. And thereafter, they can proceed with opening of their bank account and fulfilling the minimum net worth requirement, and then they can just kickstart the business by filing commencement of intimation for commencement of business. So this was a brief overview of process for setting up unit in GIFT IFSC. Bear in mind, this process is standard for all sectors except for a PSP or foreign university, wherein there is a slight change as to the generally applicable process for setting up the presence here. So this was all about it. Over to you, Priya.
Thank you, Daria. I think Daria has wonderfully covered all the sectors, giving a brief overview on each with some key updates. We'll open the floor for questions. Happy to take any questions that anybody may have. A few questions I saw in the chat which I've answered. But if anybody has any questions, please feel free to ask us. If it's any specific question related to your specific use case or your specific issue that you're looking at, please write to us and we'll be happy to help you guys. Daria sits out of our GIFT City office. So if anybody is visiting GIFT City, do drop by. Okay, I see somebody has raised their hand. Yes, Manoj, I think you had raised your hand.
You earlier as well, we applied for it once, but under
Sorry, you'll have to come again. We didn't catch we didn't catch the entire question.
I'm saying I have interacted with you guys earlier. If you can, with the revised guidelines that have come in, I heard something which has come in April under the GIC or something, or some other regulation. If you can relook at our case, and if you see there is some possibility of fitting into the license criteria which they have set for us, that will be useful, because we've tried to use it in the ancillary services, which is kind of support services. Then we have also tried to look at it as a fintech thing, because we do a lot of cross-border payments and everything, but somewhere it is not kind of fitting in.
Sure, Manoj, I'm happy to. I think, but let's take this offline. We'll reach out to you separately, and maybe worthwhile to have a discussion again.
Okay. Connect with me offline. Thank you.
Done. All right, I don't see any other questions. So I think let's wrap it. Sorry, I see some questions. Okay.
So, preferably 2 slides only. 1 slide about your company, and second, your role in financial initiatives. And then they have said that don't exceed time on slide level, don't make it a generic company pitch, and avoid cluttered slides, keep it sharp and visual. So,
एक पेज पे कर देते हैं आप, एक पेज में कर देंगे अभी.
I think someone's audio is on.
No issue at all.
सारा जो मैंने
Okay, I think there is some confusion.
Yeah.
All right. So I think we've tried to answer as much. I think we are closing our nearing our close time. I think the questions that we could answer, we've answered. The other questions we'll reach out to you guys specifically, separately, to answer your questions. Thank you, everybody. Thank you for your time.
So thank you all for joining us today. We hope the session gave you a clarity on the GIFT City and its opportunities. If you have any further questions or would like to connect with us, or if you're exploring GIFT IFSC, please feel free to reach out to us at Treelife. We would like to assist you in any manner we can. Thank you. Thanks all for joining.